Take the money. Eurozone finance ministers meet in Cyprus to debate whether the Spanish Prime Minister should stop stalling and seek a bailout. They also have the mammoth task of debating proposals to give the European Central Bank more powers to oversee the bloc's 6,000 banks. Ministers are already at odds over the blueprint, with Germany saying the ECB should focus only on banks with a systemic risk. Plus, there was some minor news from the Fed last night, wasn't there? Yes, of course, Bernanke bets big. The Fed launches another aggressive stimulus package, vowing to pump $40 billion a month into the US economy to jumpstart the jobs market.
The employment situation, however, remains a grave concern. While the economy appears to be on a path of moderate recovery, it isn't growing fast enough to make significant progress reducing the unemployment rate.
Unlike its two previous bond buying sprees, the Fed will only purchase mortgage-backed securities, and it's promised to keep overnight interest rates near zero for at least another 3 years. Joining me now is Jane Foley, Senior Currency Strategist at Rabobank. Jane, let's start with the Fed. Clearly a green light for the markets to continue this risk rally. The euro is already above 130. How high can it go?
Well, it could certainly go a lot higher if sentiment continues on the positive note in Europe. Now, how high can it go? Well, I've had a 6-month forecast of 130 for some time, and it looks like I'm going to have to bring those forecasts forward, certainly today. And of course, it is the Fed. We are looking at a weak dollar story here because of the Fed and because of their commitment to leave those bond purchases open-ended. That does make this an aggressive plan, but that's only one prong of the euro-dollar story. The other prong is, of course, the better tone in the euro, which, of course, came about after last week's acknowledgement of a bond buying plan from the ECB. So we've got a two-pronged rally here, a better tone in the eurozone, combined, of course, with this weak dollar story coming on the back of the Fed action. As you say, it's a broadly weak dollar story. In terms of dollar yen, are we heading down towards 76, 75 and essentially into Japanese intervention territory? It certainly seems that way. Now, already we're at levels where the market begins to get more sensitive about the risk of intervention. And there were reports that yesterday the Bank of Japan was checking quotes. Now, that could have just been a reflection of the market sensitivity, of course. But, of course, the Bank of Japan or the Ministry of Finance are very much on the back end of whatever the Fed decides to throw at them. And the Fed right now are really playing those currency wars. They've been a very successful member. The US dollar, even a couple of days ago, was the weakest performing G10 currency in the current quarter, as it was, of course, with the yen in the first quarter of this year too. So the Bank of Japan will have to field this weak dollar story, and that might mean intervention, but probably first it means further Bank of Japan policy steps. OK, Jane, and just to finish up, back to the Eurozone, there's a report in a Dutch paper today that Spain's in talks with the ECB and IMF over a €300 billion package. Will this rally be derailed if Spain does not seek aid? Well, it could be, because you could argue that the good Spanish auction last week was good because investors anticipated the aid. And, of course, October is a month of lots of redemptions for Spain, and it could be that with each subsequent auction, the market gets a little bit tired if Spain does not request that aid. But at the same time, why would Spain see any urgency for aid when yields are relatively low? So for now, I think it's a little bit of a game of chicken, but certainly Spain will want to get the regional election out of the way before they even contemplate getting the IMF in through their doors. OK, Jane, thank you very much. Thanks. In world news, US embassies in Yemen and Egypt are still subject to clashes as demonstrators protest against a US film they consider blasphemous to Islam. The United States has also sent warships towards Libya, where the US ambassador was killed earlier this week. Later today, a British prosecutor will open the case against former UBS trader Kweku Adebole, who is on trial for the fraud that cost the Swiss bank $2.25 billion. Let's get the latest from Asia with Lisa Yuriko Thomas in Hong Kong. Lisa, 6 Chinese surveillance ships have entered the waters near these disputed islands between Beijing and Tokyo. Is this dispute starting to threaten the economic ties between Japan and China?
Well, diplomats and businesses sure hope not. Both sides say they don't want an escalation, but China warned Japan yesterday that tensions could hurt trade. Nissan, for one, has said its business is taking a hit. But so far, in shops and department stores in some of the big Chinese cities, customers continue and still buy Japanese products and gadgets. But we'll have to see how long that actually lasts.
And on to Australia. Fortescue Metals is suffering because of the sharp fall in the price of iron ore.
Right, well, more pain for Australia's mining companies. Fortescue plans to announce next week a restructuring plan of its $11 billion of debt. It wants to end liquidity concerns as well as halt a plunge in its share price, which is down about 40% since the end of June. It has plans to cut back on expansion plans and on jobs, all in an effort to save cash, really, and all eyes on its loans and what other cash it can raise. Jamie?
OK, Lisa, thank you very much and have a great weekend. That's it for now. I'll leave you with our pick of the day. Demonstrators hold on to ropes while standing in waters of the Bay of Bengal to protest against the country's largest nuclear power project over fears about the plant's safety. I'm Jamie McGeever. This is Reuters.